drew to a close. Investors cheered by what is a report that the United States was considering lifting tariffs on China as officials look to those Asian markets as well. We'll continue to try to find a way for them to draw to a close. Of course, investors, as I say, cheering on as things continue to fare on that front as well. China officials as well looking quite happy on that front, and they are looking to hammer out a trade deal as soon as possible. Optimism that the world's top two economies are on course to reach a deal ending their long-running trade row has helped to boost equities across the world this year. The markets in Asia were all the way up, with Tokyo's Nikkei moving up 1.3% to 20,666 points. The Hang Seng was 1.3% higher as well, rising to 27,090 points. And the Shanghai Composite gaining a similar margin to close trade 2,596. U.S. stocks advanced on Thursday as hopes of an expedient resolution to the trade war between the United States and China boosted industrial shares and lifted investor sentiment. Now, the Dow Jones Industrial did manage to rise around 2/3% to 24,370. The S&P 500 was 0.75% higher as well, 2,635. The Nasdaq Composite 0.7% to the good, 7,084 points. It's been a mixed picture from the start of the year too. Now some positivity, however, coming through and seeping through from last night's trade right through to this morning as well, where you saw Asia out with a whole host of green there. Locally, it seems to be in the green as well, around 0.5% to the good. Slight bit of weakness in the rand and that currency faltering through from yesterday's Reserve Bank decision. We'll unpack all the details in just a bit, but let's take a look at those numbers. As you can tell, the mark there quite different, and a variance in the market and how it looks internationally. Of course, Europe as well. A whole lot of focus will be made on that. Just exactly where does Theresa May sit and how difficult is her task as well? All of that unpacked in just a bit. Maudi Lenzwana from Lehumo Capital joining us today as we unpack that market picture. Maudi, thank you so much for the time. But
thanks for having me.
I think Brexit continues to be a big deal and something that the markets will continue to look for with regards to certainty, shall we say.
No, I mean, you're absolutely right. I mean, this whole Brexit, it's one very interesting developments there. We are in uncharted water, in territories. And I think until such time that we get a clear picture of what's going to happen with the whole Brexit situation, we're going to remain very volatile. And I know the pound is picking up, but you see, you must understand that the pound, there've been a lot of short positions coming into this whole, vote 2 days ago. And I think some positions are being unwound. That's why you're seeing a little bit of a tick up. We are still far from getting into the conclusion of what's going to happen to Brexit. And I think it will remain very volatile in the build-up into the finalization of this Brexit. She's running out of time. There's certainly a lot of uncertainty and nervousness around the globe.
I can certainly only imagine. The good news, however, on the other side of the world, or on different sides of the world really, is that trade war. There does seem to be some sort of progress that China and the United States may begin to hammer out a deal.
Yeah.
How possible do you think that is, and how good would that then be for the market?
Yeah, look, we saw that Wall Street Journal report, but the officials have since come out and refused and actually said, no, that's not true. They're still far from reaching the conclusion. So again, there's a lot of uncertainty there. Until such time that we get the conclusion of that trade deal, we're going to remain as volatile as we've been. And, again, you've got to really ask yourself, how far are they? It's not a very easy, one to actually conclude. There's a number of disputes at hand, the whole intellectual property. It's not one that can, in my mind, be fixed within 2 months or 3 months. I think we still have a long period. We're still going to see a lot of volatility going into that. But they've got a deadline. They've set the deadline for end of March, and they've got to come up with something.
going to be very difficult on that front, though. Locally, however, market up 0.5%. The retail is not doing so well yesterday. They'll probably try to come back today, but it's still not looking good. The biggest gain is, however, today with those resource stocks. They're up 1.5%. Would you say that the likes of the miners, the likes of BHP Billiton, the diversified miners as well, are going to have a better year this year, considering that there is a little more stability when it comes to mining, having had the charter come out, a little more with regards to perhaps some investment coming back into mining?
Yeah, look, I think it's the picture does look much better than it did last year, especially for the resources sector. However, there's still a lot of uncertainty, especially when you look at China, just in terms of what China is doing. China has been, slowing down, and they're looking for measures, to stimulate their own economy. I think until such time that we actually see the Chinese, turning around their economy and beginning to really stabilize, we will remain as volatile as we've been. I think what we are seeing today is more of the weakness into that rand that's filtering into that sector. But I think in the long to medium term, there's still a lot of uncertainty for the actual sector to actually to be predictable.
I know you did join us as well after the MPC yesterday, and the thoughts I think coming out of that was that it was an unsurprising decision.
Yeah.
It was just really around the note of how far along we'd go. The rand did weaken to that mark, and that's really just with regards to attractiveness of South Africa's bond market, I'm assuming on that front. But do you see us holding rates for the remainder of the year? That's one. And two, with the mandate change still up in the air, how far does the Reserve Bank go to protect that?
Yeah, look, I think in terms of the rates, the Reserve Bank did make mention of the fact that we could. They're pricing in currently in the model a 25% rate hike in 2019. That's an improvement considering what they were pricing in back in November. I think they were already sort of pricing in about 4 increases of about 25 basis points then. So it's a bit of an improvement. The governor did make mention of the fact that there's still a number of uncertainties. We could actually see the inflation tick up, especially if we don't know where NESA and ESCOM is going to settle. Yeah. There's also a number of other administrative costs that could actually come in and pose a threat to that inflation figure. So it's still very much uncertain as to what the projection is going to be. But I think if we continue to see the rand hovering around these levels, even the oil price, if we see OPEC not having that significant impact on that oil price, then we could actually see a bit of a hold for the rest of 2019.
That oil price that you mentioned there is now $61.55 a barrel or so, now just above $60 a barrel. Not too much worried about that, though, are we?
At this stage, I think we're not so worried about that. There is just simply not enough demand for oil in the globe, especially if you look into all the projections that we're getting, is the fact that yes, there's going to be an improvement in the global GDP, but there are still some pressures. If you look at Europe, there's just not enough demand coming through from Europe, and of course a number of pressure points in emerging markets as well. So I think from a demand perspective, we're not really going to see much of a boost on the oil price. The boost might come if we begin to see the sanctions and also the OPEC members coming in and really impacting positively on that oil.
Maudi, appreciate your time, but have a wonderful weekend. Thank you so much for coming through as well. Appreciate your time. Maudi Linzwano there from Lehomo Capital, unpacking that market picture for us there. We'll take a look at exactly what's happened this week, all the economic data that has been released, and recap that for you just after the short break. Stay tuned to Market Sense on Point.